strategies which we think are correct for exporters and importers. So let's say you are an importer, talking in a very generic manner. What should an importer do? We are saying that they should continue hedging, and hedge ratio should not be low. It should not be low. It should be medium or high, preferably high. Hedge ratio on import should be high at this point of time. Forward can be used, but using little bit of option is also wise, especially for a shorter term. Like for April, May you can use options, and for June, July, August, maybe you can use forwards, or maybe for May and June you can use option, and then for longer period you use forwards. Something like that is what we think will be correct. And which option? You can use Seagull options, call spread option. These are the two options which we think will make sense. On the euro side, if you have import in euro, the hedge cost is very high. So use option. That is, if euro comes down towards 87, 86 or 85, you should get advantage of the same rather than being locked at 91. So we are not recommending forward hedge in euro. We are recommending only option hedge in euro. Otherwise, you have to be very, very careful on when you hedge. Same for GBP import, but not when Indian companies have euro and GBP imports actually, apart from some capex imports. So on the GBP, same thing, use options, because if GBP comes back to 100 or below, you should not be caught at wrong levels. Chinese yuan, that is, if you have imports in Chinese yuan, very important to have a hedge strategy which is a bit opportunistic, that you keep monitoring the levels, and whenever you see a dip, you hedge. When CNY INR comes to 1175, 1180, you hedge a little bit. Then otherwise, if it's more than 12, you just wait. Also, let's say dollar rupee has come down, but not the Chinese yuan. So you can lock one leg and wait for the time when the dollar rupee will be at 83, but the Chinese yuan will be the other way around 7 plus. That time you lock in that leg. So that is also a strategy which you should be using. Like take one leg hedge and wait for the other leg. Otherwise, hedge opportunistically at dips if you are doing direct CNH INR. That is what we suggest. So what should an exporter do? On USD INR, we are saying that hedge ratio should be medium to low. Short-term hedge ratio could be medium to high, but long-term hedge ratio, keep it on the lower side, because we certainly expect you will get a better rate, and 2% premium is not too attractive to hedge too much. You can use range forward. I think this is a typo, 81.82.0 to 85. You can take kind of range forwards. Range forwards can be designed in different ways. So basically, a range forward will protect you at 82. If dollar rupee for some reason moves to 79, 78, you don't have any stress. You are protected at 82. However, if it depreciates, you can get benefit up to 85, and you can actually design this level as 86, 87, 88 also. That if you're doing it for 1 year, I would say why not take it 87, 88. So you keep your option open that if rupee depreciates, you get the benefit. So this works quite well. Range forward is working quite well, and you can keep utilizing your contracts against your exports, etc.
The problem with dollar rupee right now is, while the trend potentially can be higher, 85, because of the risks involved, the timing is an issue. So it can be as close as 2-3 months, because if suddenly there was again, there are talks already, there are discussions around the US already banking reserves and so on. If you go into the data, you'd see that already they are starting to slowly feel the pressure again. Now, in the next 1 or 2 months, again, it might come back to an emergency funding situation, potentially. So there are these problems, but at the same time, they can be extended, the can kick down the road. So given the timing gap, we don't advise too low also a hedge ratio for exporters, because two things. One, obviously, if rupee can appreciate in the short term, it can continue to be there for maybe 2-3 months also. And exporters generally tend to lose patience and they panic and hedge more at that time. So it's better that it's a consistent strategy. Even if it goes lower towards 81, it's better to hedge in a moderate to low hedge ratio band rather than taking it high. There will be opportunities in the future. And also, as Samir said, range forwards, especially for long-term hedging, they work beautifully because the potential for rupee depreciation is high. So it will keep some buffer, especially because forward premium is not too high, and with the forward premium, the rate is not good enough to cover the potential rupee depreciation. So I think range forward works also well in that context because of the forwards being on the lower side. Euro and GBP, I would say that dollar strength right now is not going to stop. Rather, dollar strength is going to revive soon. So lock in some of those. Importers, potentially, if they have euro imports or GBP imports, maybe it's not a right time to hedge right now too aggressively, because the upside to euro and GBP from these levels is not too much. I know Lagarde is talking about rate hikes. UK inflation is at 10%. Can they afford to hike rates much higher when Federal Reserve is at least at the peak of the interest rate cycle is the question. The peak in euro and GBP could happen in the next 1 or 2 months. There is a chance for importers, but exporters, definitely any opportunity, any spike in euro and GBP is a good opportunity to hedge.